A great welcome to Accounting Unpacked. In this episode, we're going to discuss how to record a debtor's return if you are given a trade discounted selling price and if the customer is charged a handling fee for goods that were correctly supplied.
So, Yaki, we've got a question here about a debtor that returned resellable goods that they bought on credit previously. Now, there's an interesting first sentence there. It says a debtor returned resellable goods, and that's going to make sense when we get to another question a bit lower down in this problem.
Yeah.
But when a debtor returns goods, there's four basic accounts. You have to know these accounts. They are the ones that are going to be affected immediately by a debtor returning goods to us. So what are those four accounts?
So that'll definitely be sales.
No, not sales.
Debtors allowance, I'm sorry.
Yes, debtors
Debtors
allowances.
allowance. And
Okay.
then also your debtors
Control. Yes, your debtors control. That's the other account that's going to be affected. That's 2 out of the 4.
Yep.
Okay, great. Who are the other 2?
And the other 2 will be trading stock
Mhm.
and cost of sales.
So trading stock and cost of sales are affected if the debtor returns the goods to us because we're physically receiving the stock back. But, which was very common in grade 8 and 9, they do this transaction where they don't return the goods, but they're unhappy with something regarding the sale, and we just give them a debtor's allowance. In which case, they're not returning any goods, so trading stock and cost of sales are not changed. Then it's just debtor's allowance and your debtor's control.
Yeah.
So debtor's allowance is an expense, it's a plus minus. Debtor's control is an asset, so it's plus minus. Trading stock is a plus minus because it's an asset. No, everybody's a plus minus. And cost of sales is an expense, so he's also a plus minus account. Right.
Okay.
The goods bought on credit were sold for 36,000 Rand after.
And that is important.
Very, because if it said before or after, it would affect what we do next.
Yeah.
So this is after a 10% trade discount was granted.
So we need to find out what was the original selling price.
Only when we want to work out the cost of sales.
Yeah,
yes,
of course.
But the 36,000 Rand is the correct figure to use for debtor's allowance. So we will increase our debtor's allowance with 36,000 Rand, and we will decrease our debtor's control in trade and other receivables by 36,000 Rand. Okay. And debtor's allowances, where does that go? That goes in the income statement, but...
And you subtract it from?
Sales. Yes, there isn't actually a line called debtors allowances.
No.
All debtors allowances, we are increasing our debtors allowances, which means we're actually going to decrease our sales overall. Yeah. Yes, very important. Okay, now you were mentioning something about working out trading stock and cost of sales. So that's where we're going to next.
Okay, what we now need to find out is what was the cost of these goods? But we must remember there was a 10% trade discount granted. So that 36 is not the selling price that we can work on to get to the cost of sales.
Wow, you have to get back to the original selling price before you can work out the cost of sales.
Okay, so what are we going to do to find that?
I think we need to get this back to 100%.
So it is...
What is he at the moment?
It is at the moment at 90.
At 90. And that 90 comes from 100% minus the 10%. Yes, so we divide by what we are and we time
the 100
by what we want to be, which is 100. Now, if you put that in your calculator, you get
40,000.
40,000, which is the original selling price before the discount. Okay, so now we can actually work out the cost of sales.
So now we've got the markup and we know that it's 150%. So you have to use that with the 40,000 and then get to your original price.
Okay, so the 40,000 is with the markup.
Yeah.
So you would divide him by what he is, which is 100% plus the markup.
Yep.
Don't divide by 150. That's a common mistake. Yep. Divide by 250.
Yeah.
So you always divide your selling price by what he is, which is 100 plus the markup, multiply by 100. Your cost price or your cost of sales is always 100% because he's your starting point of a sale anyway.
Okay, great. So that gives you an answer of 16,000. Yes.
Yes. So this stock was returned to us with an original cost price of 16,000. So we need to increase our trading stock with 16,000, and we need to decrease our cost of sales.
Okay, so how will you handle that cost of sales in your income statement?
You will subtract this value from your
Yes.
existing cost of sales.
Okay, so the
Good.
students must note that your sales will decrease with that 36, with the debtors allowance, but then your cost of sales will decrease with the cost of that product.
Correct.
Okay,
and this, where
then
would we enter
go
that?
to the trade, we go to the statement of financial position.
Or the inventory note.
Yeah, we can go, the inventory note. Okay, so what you have there, it would be your inventory that you had. But now what happens to your inventory now? These things are coming back. So you got to add it back to your trading stock.
Perfect. You'd add it back to your trading stock. Now, we quickly glossed over a sentence. We kind of ignored that. And I know everybody's seen that. So what would we do with that 500 Rand handling fee? And why are they charging a handling fee anyway? That's actually very common business practice. If you read the small print on any slip that you've got or invoice you've received, there's very fine print there that says that if a product was supplied to you correctly, it's what you asked for, and it's not faulty in any way, you will be liable for a handling fee or an admin fee if you should return those goods within a period of time.
Correct.
So there was obviously nothing wrong with these goods because they do say they are resaleable. They're not damaged or faulty in any way. So this customer is being charged for this return.
Yes.
Yeah. So how do we deal with that?
So now the customer will have to be charged. So he's a debtor.
So that will
debtor's
affect
control.
Perfect.
So because it's a plus minus account, we will have to charge it 500 on the debit side.
So we'll increase our debtors control with 500 Rand.
Yes.
Now, where else are we going to go?
That should be handling fees, which is an income for us in this case. So that'll go to the credit side.
And the income statement?
Income statement under your other income.
Yes.
You will add handling fees, 500.
Correct. So handling fees will be swimming around with your rent income, your discount received, your commission income.
Yes.
That top sort of section. Yes, below your gross profit. Yes, because it's a form of income for us now. We treat it as a form of income. And vice versa, if we were charged a handling fee by our supplier because we were returning goods to him that we'd correctly ordered,
that will be an expense.
Then the handling fees. Yes, then it's an expense. So just read the scenario very well. If we're dealing with a debtor, we are charging the handling fee. So that's an income to us.
True.
But if we are dealing with a creditor, any handling fee would be an expense to us.
True. So in the statement of financial position where you have your debtors control or your trade debtors, you will have the minus the 36,000 that he returned, but we will add then the 500.
Very good.
Okay.
So he's not actually getting the full benefit, of his refund.
Poor guy.
He's being charged because this is what he ordered and there was nothing wrong with the product. So fair is fair.
That's true. Okay.